Hello, hello, hello. Hello, hello, hello.
Evening.
Good evening. We have more people coming in. Beautiful thing, beautiful thing. What up, Harry, Peter, Janelle, Kelly, Adam,
Mm,
obviously. Hello, hello. Just watching the market right now. It kind of did a weird like counter trendy thing. And then anyway, I'm just watching it. It's interesting. It's trying to come back down. Um, sweet. Well, it's 7 o'clock. Unfortunately, I have to leave early today. So we're going to have a shorter meeting, but I promise you it's going to be a good one. I'm a little disappointed that there are certain people that I made this training specifically for that are not here today. And that's okay. Hopefully they catch the replay, because I think it will help them. Some of these slides are going to be a bit of a repeat from the Get Funded Challenge. So if you recently went through the Get Funded Challenge, some of this might look familiar. If it's been a while though, you might have forgotten some of these things, and so it's good to review. But I think that what is shown in these slides is super duper pertinent. So there's this thing. Actually, you know what? Since there's so few of us, we do have time to do something positive over the last 7 days. It can be trading related, doesn't have to be trading related. Let me know what you got. Um, I'll start. I don't know, some of you know this already, but I met a lady and she's pretty awesome. So pretty excited about that. It's a good one. What else you guys got? 40 plus pips this morning. Nice job, Janelle. Very nice. Very well done. Again, it can be trading related, doesn't have to be trading related. Just want to see some positivity.
I met a girl at the gym as well and planted a
Oh,
seed for so that was a yeah, that's a super positive as well. She's a gym girl, so that's awesome. So I'm pretty stoked about that.
what
Yeah.
was what was your pickup line?
Hi.
Smart,
You gotta be
smart.
careful. You can't just approach girls when they're working out. Like you gotta wait for the right time because it's a bit of a fecal thing. You gotta be careful at the gym there. Yeah. There's a difference between creeping and being polite. Yes. Fine line.
Janelle, just because she's on our team and we talk about this stuff on team meetings, she knows my favorite pickup line that I've used on people. It's hilarious. One of these days, I'll share it with you guys on a different call that's maybe not recorded. It's extraordinarily offensive, but it's super fun. Anyway, moved my daughter into her first home. Nice. That's a huge win. Love it, love it. All right. Well, let's get started just because I have a little bit of a shorter schedule today, so I need to make sure we get through content. I'm going to tell you the number one cause, in my opinion, the number one cause of bad trading, okay, is a very simple concept that I call mindless trading. Now, there's a difference between when James says don't think in front of the charts, that's different. That's not mindless. That's habitual. Okay, there's a difference. So when James says that, he means you should have a trading plan where you know exactly what to do in every situation. Therefore, you no longer have to think about it. You just execute, right? That's discipline. That's what he talks about. When I refer to mindless trading, I mean essentially where what ends up happening is people will say, "Hey, you know what? I see divergence, I see rejection of a line, and therefore I'm going to enter." That's cool. Good. Enter. Yeah, do it. But then they think because those things were true and I placed this trade, it's gonna go the right way. And they kind of turn off their brain and they think no matter what, it's gonna go that way because DRS is a thing. DRS is a thing. However, the market is also a thing. And so a good way I like to think about it is, trust your analysis, don't trust the market, is typically a good kind of rule of thumb, if you will. And so what I want to do today is going to cover some of these slides that we have done before in the Get Funded Challenge, but I kind of want to re-emphasize some of it because I'm seeing, unfortunately, I am seeing quite a few folks who take trades that were well analyzed, really good opportunities, and then they just hang on to it forever, you know? And so I kind of want to hopefully help you guys with that. So I'm going to share my screen, and ultimately, risk management looks like this. You have a balance scale thing, and you're balancing, do I lock in, protect the capital, or do I give it some space and let it reject something and then go in my favor? When do you pick either of those things is kind of the great general big old question. And of course, the answer is that great big general answer that nobody likes to hear. However, thank you, Brett. Brett is it's his favorite answer. He has this answer memorized. If you listen in to James's clinic calls on Monday, which I would highly recommend everyone attend, James does say depends without saying the word depends, but he does. Today, for example, he gave an example of a tweezer top candle pattern. And he said, look, there's divergence, rejection, tweezer tops, boom, you enter at the 60 level. And there was a lady on there named Mary who was like, wait a minute, just to clarify, we would have gone in at the 60 level? And James was like, well, hold on, let me pull up the rest of the indicators because he didn't have all of them on. The rest of the indicators told him a lot of things about Camarillas, about being in the midpoint of the Camarillas, about where the super trend was. So where was the LRI? What was it doing? And he needed those extra confirmations to fully and confidently tell Mary yes or no. That is the word depends. Okay. So observe that, recognize it over and over and over again because it is crucial. It is absolutely crucial. There's the big old word depends. This is where you can't be mindlessly trading. Have a plan, execute the plan without thought. I'll explain. I'll explain. It makes sense. Depends on what? Depends on the TSI, the LRI, divergence, the MACD, benchmarks, support and resistance, candle patterns, etc. Right? It depends on all those things. You got to be looking counter trend exactly. Trend versus counter trend. Is it in a profit pocket? Is there news? All of those things all contribute. So, what is the root cause of the industry failure rate? If you didn't know, traders as a whole in the industry have a 97% failure rate. I just looked today of our live traders who are actively submitting their trades to us. 93% is where we're at profit per week. That's pretty outstanding. Okay, so what's different between those folks and the industry? It's the desire for mindless trading. It's what we want. I'm not going to lie. I would love that. I would love for something to just say, look, you cross this line, you push this button, and you're going to make money. Wouldn't that be great? That's not reality. Okay. So we need to stop desiring mindless trading because it's not a thing. It literally doesn't exist. Trading without depends. It's not a thing. Not if you want to be profitable. Mindless trading doesn't exist. Only intentional trading does. There needs to be an intent with behind everything you do. If you are entering a trade, you're automatically taking a level of risk. How do you handle that risk? What do you do if the market goes in your favor? When do you lock in versus when do you give it breathing room? When do you take your pips and run? When do you, if it goes against you, what do you do? When do you close it? Do you let it breathe? What are the determining factors of that? As you guys know, for me, the vast majority of my depends has a lot to do with that TSI. He's my best friend. Okay. But that's not for everyone, right? Nothing is luck. Everything is planned out. You need to have a plan one way or the other. I always wear depends while trading. Just in case some of those trades scare you a little bit. So here's the basic understanding. This your trading plan should know exactly this. Okay, you enter, let's just say it's a buy. In this example, it's a buy. The market goes in favor. What's your plan? Okay, it goes up. What are you doing? When are you locking in? When are you doing a break even? When are you locking in 5 pips, 10 pips, etc.? Are you doing it based on benchmarks? Are you doing it based on pips? Are you doing it based on candle patterns, divergence, whatever it is? Okay, what's your plan if it goes in your favor? And then on the flip side, you enter a buy and it goes against you. What's your plan? That's where this is thoughtless, not mindless. This is where James says, don't think because you have a plan prior to trading. Follow it. When you start overthinking during the trading session, even though you have a plan, that's when you stop following your plan. Okay, that is a problem. So I hope that you guys see the difference there. So here are some of those depends factors that I would strongly recommend kind of getting used to, memorizing. This takes practice. I don't expect anyone to know how to do all of this out the gates, okay? But things that I like to keep an eye on are with the TSI. Did it RTF? Is the line green or red? What is the angle of the line? Is it at action, caution, or overbought or oversold? The LRI. Is it, do the 1 and the 2 minute agree on the LRI? Is it for you? Is it against you? Divergence. Do we have normal divergence within the indicator? Divergence squared. Is it for you or against you? The MACD above or below the zero. Has it RTF'd? Is it red? Is it green? What's the angle? Divergences. Benchmarks. What is the order of the EMAs? Buy order or sell order? What's the angle of the EMAs? Are we in the R's or the S's of the Camarilla lines? Where's the nearest big round number? All of those things and more. These are the considerations to have during your trading at all times. Okay. This is why trading, by the way, it's recommended to do small spurts. Don't trade for 10 hours a day. It's not healthy and it's not going to work. Okay. Because you have to focus on a lot of things. I guarantee you, you trade longer than 2 hours, you're going to start losing that focus. You're going to miss these things. These are very important details to always see and keep in mind. Seek to understand. Understanding all of these indicators will give you all of the ammo you need to make wise decisions in the market. Okay. So that's why we always talk about these particular indicators. I know some of you have gotten creative. I know some people like to use a certain different kind of EMA, I think somebody said they're doing like 89 EMA, kind of a above for buys, below for sells situation. Some people prefer Bollinger Bands. Some people like the PSAR. There's other indicators besides what's listed here. These are just kind of the main ones. And you can kind of figure out what makes sense for you. What's going to help you have that discipline to follow that plan very, very, very closely. Any questions on that? How do you seek to understand? Well, we have a lot of training. Okay, so you could go into the indicators edge series. You can go into just the regular indicators section in basics. You can go into the get funded challenge. James's calls on Mondays, these calls on Monday nights, um, the trading sessions themselves. I don't know how many of you do this, but watching the replays of those trading sessions has been very instrumental for me in improving my skill. And I know the same goes for several people, including Matt and Janelle. It's very important to watch replays, especially if it's a session that didn't do so well, or that ended okay, but like it was a rough ride. Right? Go watch it. Go rewatch that session and figure out where you could have made wiser decisions and what factors you should have been looking for, you could have looked for that you missed. We're all human. We all miss stuff. I do too often, right? But even missing stuff, you can still be profitable. Um, I did want to share with you um, my trading plan. That's not it. This is it. So you guys can take a screenshot of that. I'll also see if I can put it in Zoom for you to download there. Um, the basic thing that I want you to look at is this bottom right-hand corner, trade management rules. And now this is ever evolving. What you're seeing right now may be different in a couple weeks from now. Okay. It should ever be evolving for you. You learn. Your skill set is going to continue to grow. And as it grows, it's okay to make little shifts and adjustments in order to grow with it. But this is where I'm at right now. And so you can see, in general, I have my initial take profit at 20 pips, my initial stop loss at 10. Benchmarks, for definition purposes, is the big round numbers, BRNs. The EMAs, Camarillas, highs and lows, flat, previous flat super trend lines. So you see a super trend line that's flat, that's support resistance. So the first goal, this is the way I kind of think in my brain. I always think like, okay, I enter a trade. How fast can I reasonably get my break even? Right? Like I want to not take a loss. Trading is not about winning, it's about not losing. So, how can I not lose this trade now? And so I start thinking about that. This can happen when the price moves 5+ pips in profit. If I see it go 5 pips, I'm probably locking in a break even. Or when the price is bouncing off a benchmark, it's showing signs of rejection. So even if it goes 4 pips in profit, let's say I do a buy, it goes 4 pips in profit, but it hits a 21 EMA and bounces off, I might just lock in and take it. Take that BE. That's not a good sign. I don't like that, you know? And you know what? Let's say it does that. It hits me for a BE and then it goes and crosses the 21. That's just a re-entry right there. Continuation. So once capital is protected, my break even is locked. I can no longer lose this trade. It's a beautiful feeling. Once that happens, every time the next bar closes, I move my stop loss 1 or 2 benchmarks away from the price, depending on my TSI. So if the TSI is near caution, I go pretty close. I get to 1 benchmark away, one line, one big round number, one Camarilla, one thing away. If the Camarilla is not by caution, I'll go 2 benchmarks. I'll give it a little breathing room. It's okay. It's got room to grow. Might come back and reject the line and then keep going. I'm down for that. Once the price hits 10 plus pips, make sure to move my take profit to 30 pips instead of 20. Remember, it started at 20. And then hover my stop loss to either 5 or 10. So I see it go plus 10. I'm hovering at 5 or 10, getting ready to lock in wherever that bar closes, depending on how fast the price is moving. Once it hits 20 pips, I move my take profit to 40, and then I lock in at 10 for sure. For sure. No excuses, no changes. This is where I don't have to think about it. I see 20 pips on the chart, I'm locking in 10. There's no if, ands, or but about it. Okay. Once 10 pips is guaranteed, continue to follow the benchmarks and fib levels. I'm working on my fibs. Tightening as TSI approaches caution and overbought and oversold. So I just keep following the market from there. Once I lock in 10, I feel pretty at ease. I've got my daily goal, right? Be aware of these are the depends factors. If you're in a trade and all of a sudden you notice divergence the wrong way, oof, be aware, tighten up. If you notice a classic color change pattern, which is when it's a string of greens, then it goes red, don't just exit on that red because it could be a classic color change where it goes another string of greens. Same with the power move pattern. We actually saw that this morning. I saw it this morning anyway, quite a bit. It's where you see a string of, let's just say, greens again, 2 reds. Okay, but they don't like break out. They're just 2 red bars, and then it can continue. That's I've heard James call that the power move pattern. Normal candle patterns we always look for H's, M's, W's, high test, low test, indecision bars, all of those things, fractals, all of those things go into that consideration. Be aware of those things. So it's not just, hey, you know what, let me get this break even, etc. This is how I manage a trade in favor. But these are things I'm always kind of keeping an eye out for. Do I miss them? Yeah, of course I do. I'm a human being, as we all do. But this is where the practice, this is where there's a difference in skill levels between different people. Okay, because some people see these things like James, the freaking Jedi. Okay, he sees these things so second nature. I don't even think he can explain what he's seeing. But Matt and I see it. We'll study his session and be like, "Duh, James just naturally does fibs. You know, it's like it's crazy. He just knows there's a fib and there's a thing, and he makes decisions with that. And so it's just pretty nuts. It's pretty nuts how skilled he is. And but it gives us a lot to work for and work towards. So anyway, this you guys can use however you see fit. But does all that make sense? Anyone have any questions? And I apologize. I think a couple of you hopped on a tiny bit late. I am going to have to jet out a little early today. This is just a 30-minute today. I forgot about previous commitment. So, but it's all good. What questions do you guys have? Now is the time. We've got a few minutes for questions, and then we'll do
I
top
I have a
takeaway.
quick question about your TSI. Do you like your TSI setting on um, What am I trying to say? Like when it changes angle, it can turn red, or you can have it when it actually um, flips RTFs. Do you have a preference on which one you like better?
I focus more on the angle.
On the angle, you don't concern yourself with the color of it, like
I mean, concern myself with, yes, but if I had to put a weight on it, I would put more weight on the angle of the TSI than anything. Think of it. So I used to teach this in binary. I don't know if do we have any binary people with me? Cameron, did you do binary? You were back then. Okay. Stephen Tomini, yeah. Okay. Cool. So we used to talk about the difference between a weak and a strong candle. And essentially, it's when you see a bar move and the TSI moves with it, that bar has influence. That bar is going to determine a lot in the next minute, right? So that's what I'm always looking for. Now, if I see a bar start to go down and the TSI doesn't move an inch, that's a weak bar. It might be a big bar, but it's weak. It's not actually influencing anything. That's a little caveat that I like to look for. If I see a lot of influence and that thing is moving and it breaks a BRN or something, I'm going for it because that's going to continue that angle and it's going to look nice.
so you prefer angles over color per se, basically,
Yeah.
like a color change in that, and if it changes. Okay.
Yeah, so Matt, a confident candle versus timid candle, that's a little different. This is where it was confusing. I know, I should have come up with better names. But there was confident and timid candles, which are 100% a thing. And then there's strong versus weak candles, which are totally different. It's a different thing. But yeah, confident candles are amazing. That in most of the time, a confident candle is strong, but you can have a weak confident candle. I used to call those Chihuahua candles. It's freaking weak. You could punt it across the room, but it's very confident. Right. So you gotta keep an eye out for that. Anyway, very good question. What other questions you guys got? Can you define the power move again? Yeah, so if it's basically the classic color pattern and the power move pattern, both of them have kind of a single goal, or a single thing to look out for. Basically, it just means don't get out too soon. It's one of those things to pay attention to so you don't get out before another big move. So if we're looking at bullish, you would have a string of greens, and then one red is a classic color pattern. Okay, so the classic color change pattern. If you have two reds in a row, that could still be what James has called a power move, which means it's just kind of resetting and pulling back a little bit before it continues. So if you see two reds in that particular case for a buy, basically I'm saying you could probably lock in at the bottom of the second red, but you don't want to lock in at the bottom of the first because
And
it could potentially give you that continuation.
can you hear me?
Yes.
And these are going to be like little indecision red bars. Is that what you're saying?
Not always indecision, but definitely inside bars, meaning they're not engulfing. So
So,
if they engulf a green bar, that's not the same thing. They have to be inside bars.
and so if just am I getting this straight here, this is this more of a thing in like a high volatile? Sorry, I'm cutting potatoes. Is this more of a thing in a high volatile move, like when there's like quite a significant bullish move up already, and then it's like, all right, two red indecision candles. These are like not necessarily get out bars, but it's like just wait, just and then that's when it goes again, or is it more like a slowly trending
First
kind
off,
of
first off, I don't appreciate you threatening me with a knife for this answer.
here, man?
Um, no, I would say it not necessarily volatile, but volume, yes. So typically it's
Volume,
after.
yes.
Yeah. So it might even be a very clean volume move. So think about like the open. You'll see this a lot at the open. You'll see one big bar or two big green bars, then you see like an inside red bar, and then it keeps going up after that. Like that's what I'm looking
So I
for
think
that.
I've observed, not that I know what I'm talking about, but I have observed that that happens sometimes when there's like a higher time frame that just has to wait for a candle to close or something,
Oh
you
yeah,
know?
very
Yeah.
common.
It's like the 1 minute just like is just like waiting, waiting. Okay, the 3 minutes later, let's go, kind of deal.
Exactly. Yes.
Okay, cool.
Spot on.
Thanks, man.
No problem. What other questions you guys got? Sweet. Well, we have a little bit of time for top takeaways. I know this was a short one for today, but I definitely want to hear what was your top takeaway for this particular.
I do have one more question if we have time.
Sure.
I entered a buy today after the open. After that big sharp move down, there was a hopper combo. I didn't enter on the super trend. I waited for the cross. Actually, I waited for the cross of the 25,000, which was
Nice. Yeah.
which was in the hopper combo bar.
Yes.
So it was a good entry, but the
I
21.
took the same one.
Did you?
Yes.
Did you enter when it? Did you enter when it? Okay, that's great. Did you enter when it crossed above the 25,000, or were you in already?
Nope. I entered at 25,000 exactly.
Right. Okay. So did I. And when I did that, the 21 EMA was like 20 pips below that point. So I was like, I don't know. Is this a late entry? I don't know. And then pulled back 10 pips on me. And I was like, shit. So I exited. And then it pulled right back up again. I was like, shit. I was right.
Classic
And
color change. That was a classic color change. So
in the
I'll tell
same
you.
bar, or even in the same bar. In that same bar, I exited when it pulled back 10 pips. And then I re entered again on that same bar. But then the red bar that came right after that, I waited for that one because that one just pivoted right off the 25,000.
You're right.
Anyway, yeah, so I was wondering with that, after my initial entry, right at the 25,000, should I have obviously just held it? And would the rationale be because it stayed above the mid BB there? That would be a reason to hold that one?
Nope. I wouldn't hold it. So what I did is I took 10 because when it crossed 25,000, it went 20 pips first and then it pulled back and it was fast. So I just showed you my trading plan. I see 20, I lock in 10. So I locked in 10, it came down, it hit me out for 10. And then I waited. Sure enough, I saw it reject the 25,000 again, which gave me a continuation on the very next bar because I saw the classic color change pattern. Now, in terms of your question, whether or not it's late, I would only consider a trade late if my TSI is close to caution. That's what I base my late trades on. So as long as TSI is not right at caution or something like that, I'm usually okay, especially at the open specifically.
So I entered like basically when there was an indecision bar right before that bar, and it was like almost at 25,000. So I entered nearly right there. But
I
mine's I
see.
don't know. Maybe. Oh, you're looking right at it, right?
Yes.
Maybe I don't know. Maybe I held that too long, but I don't know if it. I don't know if mine went, or maybe I had a slightly late entry, but I don't know if mine went 20 pips in profit, or it just might have punched me in higher.
So did you go in at the indecision bar instead of the other one, the next one?
I went in on the next on the like because I was expecting it to reject the 25,000 and do a hopper rejection, and I was like, well, if it breaks 25K, I'm in it, and then I
Yeah,
did. So that's where I entered right there. But I
I
might have
see.
punched me in a little bit higher. So um, yeah, I don't know. I took a 10 pip loss there. You took a 10 pip win. Clearly, we have some problems. So I'm still.
And it doesn't even have to be 10. I mean, my rule with the open is as soon as I see 5 pips, I do a break even. So what happened on that is I saw 5 break even, I saw 10, I started moving my stop loss, I saw 20, I dropped it at 10. So it was very fast. I did that very, very quickly. I do remember that this morning.
So how
Um,
many guys were in that trade?
how many seconds was I in that trade?
So you were in and out on that one bar.
Yes. It was like 10, 15 seconds.
Right. Okay.
Very
Yeah.
fast.
That was a bit wiki there.
Yeah.
And so after I lost my 10 pips, I re-entered it again and I held through that red candle, and then it popped back up again. But because I was freaked out from that first whatever wikiness, I
Yeah.
did hold it to the BRN 100 pips up. I don't know. It pulled back after going up 25 or something. I took 14, so I ended up plus 4. And
Got
Yeah, so +4 instead of +100. That's a bit hard to. That's a bit hard to.
You're looking at it wrong. Don't think about it like that. Because
From an execution
you,
perspective, I had
I
executed
had
better. That's what I would have had,
I
right?
had another 10 pip play after that as well. So you could say I got 20 pips instead of 100. Janelle got 40 pips instead of 100. You know what I mean? So that's a rabbit hole. You will never ever ever be content with your trading skill if you follow that rabbit hole.
Brett
So
says, "Got it. Perfect." Yes, that is my problem.
you don't have to be perfect. You have to be profitable.
No,
Big big difference.
I know, but the misnomer that I have to be perfect is my problem. Is what I'm saying.
Yeah.
Janelle says
So
your pips. Yeah, that's also true. I'm sorry to take all the front
no,
seat.
no, no. This is great. This is great. And I'm sure everyone else is learning from these questions too. Um, so I'll
That
share my
that
screen.
particular red color change is with a pivot off there as well. Like when you
Yeah,
look
that's
at it,
that one closed right at the 25K, and I was like, yeah, I'm gonna hold that.
So
well,
we're
it
looking
pinged off the pink
we're
after the
looking at
color.
here. So basically we had this indecision bar. I could see this potentially faking you out because it didn't actually quite hit 25,000, and that's where my advantage comes into play is I look for that punch. You guys know. So that one didn't even touch it. It got really close, but it didn't even touch 25,000. So I did not fall for this indecision bar right here. But then this guy, as soon as he punched that high, I went ahead and entered, and then it went up maybe not exactly 20 pips, but it got really stinking close. And so I locked in 10, and then the red one came down and hit me out for 10. And then I waited. This red one came down. It rejected the 25,000. It closed here. This green one, it came down. It rejected that same low. And then as soon as that crossed up, I entered again. And then this was not clean. Okay, this was jagged. It hit me for another 10. So I got 20 off of those two moves. That's it. And then look, and then it continued on without me because that's what it does sometimes.
It does do that.
And that's okay, right? So like if we get our focus back to 10 pips a day, I'm telling you, it's so much nicer to just get a whole bunch of single base hits and not have to worry about home runs. And then every once in a while, you'll get a beautiful home run. Yesterday I got like a 30 pipper. It was a beautiful thing. I was going for 10.
I agree. So when I hit my 4 pips instead of the 100 pip run, I watched the 100 pip run go by, whatever, whatever. And then I was like, all right, 4 pips, whatever. That's always another bus. But then I was like, well, should I just stop there? Probably should, since the 100 pips went by and I got 4, and I
What does
likely
your trading plan say? Does it have a time frame
does my trading plan have a time frame for
for
for?
trading? Like when does your session end?
Well, I had only just started,
Okay.
so I was trading for like I got at the charts like 10 minutes before the open, and so I wasn't like I just started. The time thing wasn't a factor, but I was like 4 pips. Should I keep going? Should I be disciplined? So this is perhaps an
Ah,
important question
yeah.
where I I think I should have realized that I executed poorly, and because of that, on a 100 pip move, I got 4 pips. Fine, that's fine, 4 pips. However, because my execution was not what it could have been, that should have been a sign that I should have just stopped right there.
Um, maybe, yes and no. I mean, I could see that. I could see that justification 100%. And there have been times where I myself have done that, where I'm like, okay, I'm being a doof today. I'm gonna stop.
Yeah.
And you just have to be very self-aware. Was it because you missed something? Because that's just a human mistake, and that's okay. Or is it because you're not following a plan because you're just trying to get your pips, right? Like those are the two things you have to ask. Am I still trading disciplined? In which case you can continue as long as it's within your trading plan time frame. Or did I only get 4 pips because I'm not following my plan and I'm kind of taking silly trades? And if that's the case, then I would stop for sure. You have to be aware of that.
Right. No, yeah, I was still following the rules.
I mean, there have been plenty of times, Aaron, where I start out my first trade, I lose 10 pips or 20 pips. The other Wednesday, I lost 30 out the gate because it was a news item and my analysis was wrong. So I went in, boom, hit me out minus 30 immediately. That by the end of that session, 2 hour time block, I was up 25 pips. So I ended up 55 more pips during that session, right? And I just stayed disciplined, I stayed focused, and I just followed through. So it's in, that was a risk I was willing to take for news. I do that sometimes because I can. That's all.
Fair enough. Cool.
Does that make sense? Does that help a little bit?
Yeah, totally. That's that asking the question of, okay, am I just like messing around here and being stupid, or like were these disciplined trades that I just made an error?
Yeah.
That's
That's the question.
a
Always be asking that question because that'll determine a lot for everybody. I do that all the time, all the time.
I
There was
wasn't
one.
wrong in trading then,
There
perhaps.
was a few Wednesdays ago. I I lost a substantial amount, more than I've lost in months. And in hindsight, and I told several people this. In hindsight, I did not follow my plan. I lost 3 times in a row, and I continued to trade. That was all on me, right? So I kind of deserved the loss, But that's something you have to always be kind of asking and being self aware of that. So very good. Thank you for your questions, Aaron. Unfortunately, I do got to get going, but I do want to read off these top takeaways. Thank you guys for these. So Janelle, top takeaways: the reminder of confident candles. Cameron, back to basics. Peter, inside bars of the power move. Nice. Breath, gotta be perfect. I don't think that's your takeaway. Cameron, practice lock in tight, quick drill. Yeah. Do some drills. I love that. Peter, +4 is better than 0. Nice. Okay, and that's not a takeaway, but that's a comment there. And then takeaway is review the trading plan and do some tweaking. Takeaway from Piera, look out for classic color changes to stay in the trade longer. Very good. The new toolbox, Kelly, if you don't mind, can you message Travis to get you in there? I think that would be helpful. DRS does not necessarily mean enter. I would say DRS most of the time, with trend especially, most of the time means enter. It doesn't necessarily mean hold the trade. That's the difference. Top takeaway is the power move. That's a new one for me. Yeah. I wish I had a video for that where James actually goes over that, but he does in it's one of his sessions or a couple of his sessions that he talks about it during the session. It's just one of those things that when I'm reviewing his sessions, I notice it. Perfect. Awesome. Thank you guys. Sorry again for cutting it short, but I appreciate all of you, and I will see you guys on the sessions tomorrow. Adios.